Are you drowning in medical bills? On today's episode of Crap Now What, we're going to address the heavy weight that medical bills can put on your budget. If you've not met me before, I am an untaxable wealth strategist. And what this position does and what my company does, we help people to take slices of life and take their funds, any funds that are being set aside for wealth, retirement, the future, anything along those lines, and help to put you in a position to take ownership of more of your funds and give less to the government. So why would I bring up a subject about medical bills when that's not really in my purview? I don't help control medical bills. But I can in a way, and my team can in a way, help you to put yourself in a better position so that when you do have some unexpected expenses, that you don't have as much pain and you're not struggling. So let's step back for a moment. When you catch this episode, and I do hope that if you're new or if you're a friend or already a client of our team, I welcome you back. At the time of this recording and why medical bills are so much on my mind, as sometimes I can project or see that pain that others have had with medical bills. But just days ago, the CEO of United Healthcare was, a lot of the press is using this word, assassinated in front of a hotel in New York City. This is something that people are really talking about. Nobody knew this guy. Hardly anyone knew this guy. There are hundreds of thousands of people in the United States that are clients who have their health insurance coverage through United Healthcare. I'm one of them. I had no idea. If you asked me to my face who the CEO of United Healthcare was, I would not be able to tell you. Would not be able to tell you. I'd have to Google. Yet this person, many people kind of know at arm's length because of being associated with United Healthcare. And many people are talking about this. I'm really kind of surprised. Going different places. I personally have had several medical visits. You can't tell with this sweater, I think, that I am still wearing a back brace. Hopefully I'm on the back end of that and in a good position to care for myself. But medical bills are also on my mind, but I'm going to various visits under different healthcare situations to help heal my back. And people are talking about it, sitting in the lobbies and the waiting rooms, the healthcare people themselves. It's pretty amazing, the number of people who are talking about this. And I think it comes from a space of, we wonder why. Why did this guy get shot? Most people are speculating it's because it was an angry person that had too many medical bills. It's getting close to Christmas. And this is the spirit of crap now what, is that we take this slice of life and say, okay, put ourselves in their shoes, potentially. Nobody's thinking about necessarily running around with a gun, but putting themselves potentially in a scenario to maybe understand why somebody was maybe slipping down into this deep quagmire of medical bills. And perhaps it was ruining Christmas. Perhaps it was ruining, they lost a loved one. People are speculating as to what it is. I've seen some other reports, though, that it may not have been that personal. But I'm bringing to you today, because it's on people's minds, the holidays, how expenses get so much greater, especially if a person is not well planned. What if medical bills are putting pressure on your budget? What if medical bills are making it hard to even get healed because of the weight of the debt that comes with it? So we're going to dive into that topic today about medical bills. And the reason I'm doing this, other than the fact that it's in the news, other than the fact that I personally am going through a stack of medical bills that are starting to hit my household in my inbox in the mail, is because I want you to be as informed as possible about your options if you have the weight of medical bills. And I'm going to share some stories along those lines. So let's talk about and address the depth of what medical bills can put on a household and to a person. And the reason this is especially relevant, not just because it's on people's minds because of the situation with United Healthcare, but also because in the last decade or so, people have found themselves, a large percentage of households have found themselves having to learn and understand healthcare because companies have changed the percentage that they pay for. They may provide healthcare, but in many cases, more and more people are facing a high deductible healthcare plan, and that can put a huge amount of strain on the budget. It also puts in front of a person who is employed, who is deciding what their healthcare plan is going to look like for the next year. And here we are around the holidays again with more bills, and the idea that you have to pick from a menu. Am I going to pay this much per month, or am I going to change it and maybe not have as much coverage, have to select a higher deductible in order to keep my health care in my budget? These are very big decisions. And sometimes, frankly, it gets annoying. It gets tiring to have to understand healthcare to the point that when a person is signing up, when we're looking at healthcare costs and what our portion is going to be, it's disappointing. To some people, it causes stress. It's disappointing. It's confusing. It's like you're rolling the dice. What's my healthcare going to look like next year? What am I going to need to do to cover my family? Can I afford to pay another $100 a month just to keep my deductible down? This is a real life decision. Healthcare and deciding what you're going to choose for your next year for healthcare is a very big decision. These decisions now have acronyms. Over 51% of Americans are having to choose an HDHP. And again, if you know me and you found me, or if you've found me now for the first time, I look at these statistics and bring these to help paint the picture of how important this slice of life is. According to the Bureau of Labor Statistics, 51% of the households are in an HDHP, which is a high deductible health plan. The average deductible is $2,500. That means the first $2,500 of medical care is paid out of pocket. Unless, of course, there are some exceptions to certain wellness visits that are covered. Let's put that aside for a second, because we've talked about over and over in this podcast, this crap, now what? I have these extra bills. Crap, now what? I don't have the money happens to almost 70% of the households, 75% of the households. This is on earlier podcasts. Households that are making over $100,000 a year are feeling the pinch of the cost of the health care. They're feeling the pinch of, and this is a very real point, feeling the pinch that more of the costs of healthcare are being shifted to the employee, shifted to us, working Americans who are feeling the tightness of the inflation. I would say the taxes, but honestly, if we were being fair about the taxes are at the lowest level that they've been. at least since 2017. So we can't really say that it's high taxes because that's actually been leveled out. That's just something we have to accept, and we just kind of tra-la-la through life that this is what we're paying for taxes. But let's get back to the day-to-day household budget. More and more dollars in healthcare are being shifted to the household budget. The plans are more expensive. The out-of-pocket, high deductible healthcare plan, out-of-pocket, average of $2,500. That's over $200 a month if you break it down. Plus, and I'm going to take a dive into this, more and more of your retirement savings is put on you as an American. It's put on you in your household. So you've got inflation. You've got a whole new world since we came out of the pandemic as far as how money goes in and out of a budget. Your future is now more of your own personal burden. Your healthcare is more of your own personal burden. What does that say? That says that more and more people have to live life less, make sacrifices, go to sleep at night, trying to think about where that next pool of money is coming from to pay these medical bills. And paying medical bills is very important. They are a different type of debt. It is a type of debt that's not quite the same as missing a car payment or missing a mortgage payment. You can often negotiate with the medical provider to lower those bills, or at least have some sort of payment plan. Lowering the bills usually means like you pay all of it in front and they give you a lump sum discount. That's one of the things that I think is important for you to know, that oftentimes if you pay right away, at least there's a 10% discount. That aside, as an American, as a human, as someone who is walking on the face of this earth and trying to pay their bills day to day, raising children to understand these important decisions, most of us in this late boomer, early Gen X age, in our late 50s, early 60s, have adult children who are making decisions every day similar to this, and they've been forced into high deductible healthcare plans. They're being forced into those at the time when they're thinking about having children. So from the moment a child is born, it's the same. It was like this when we had our own children. But at that time, honestly, labor and delivery was covered a little bit better. But this is a high impact concern. Medical bills, unexpected medical bills, on top of the fact of the high deductible. And here's the impact. If a person gets behind, if a person has racked up a lot of medical bills, even if you're paying on them and you've worked out a plan with the healthcare provider, it shows up still as outstanding debt on your credit. So if a person is about to go buy a car or needs to buy a car, if mortgage payments or the idea of moving from one place to another and getting a new mortgage, if there's still outstanding student loans, the weight of the medical bills on top of your credit is significant. It often makes it harder to get approvals for loans. Because the creditors are pulling credit, the idea is that this person is weighted down with bills on top of their day-to-day living. And now if you want to have a car or you want to have a mortgage, if you get approved, it's usually at a higher interest rate. And I don't like to be a Debbie Downer. What I'm doing right now as I weave this real life situation and telling you the truth that this is really what happens to people, at least people that I've been around and I've watched this, is that it is imperative to be planned and have plans ahead of time and find a way to budget these items in or find shortcuts. Because what I want you to be as informed as possible about the impact of medical bills, on top of the stress, on top of the fact that in my case, like I said, there's still rehab, there's PT that I'm going through to get better. So anybody else that's going through these types of things knows that these decisions seem to mount, and the reality of having to take ownership of a larger percentage of the healthcare is and can be an even greater burden. So let's talk about this a little bit more. According to the Bureau of Labor Statistics, as I said, 51% of the households are in a higher deductible health plan. Now, the Bureau also broke that down into some statistics that surprised me, because of that 51%, about 49% are people that are in a managerial position, something that is associated with management of a company. And that is probably a surprise. I think a lot of people would say that these high deductible healthcare plans lean more towards maybe less lucrative, more towards middle households that are struggling with their budget, not necessarily managers who one would assume would be at a little bit higher salary. So this is really a dug deep situation of these high deductible healthcare plans. 58%, this is not a surprise, 58% of those that are in these high deductible healthcare plans are more of our day-to-day people who help do things in our country to build, like construction, other types of maintenance. So these are very people who have positions that are considered necessary for our country to function, so to speak. It gets very complicated. I made a point earlier in this podcast that it gets complicated to look at a menu of healthcare choices and be facing this typically in this late fall into early winter, right before the holidays, as I've said, and try to decide what decisions to make that would fit your household. And, well, I'm going to say probably don't really fit the budget, but are the best decisions we could possibly make. So they go deeper. Healthcare plans now, we used to always have HSA options, which is a good way to set aside money for those out-of-pockets, so it's not a big smack in the face. Plus, those are pre-taxed. I'm typically not a fan of pre-tax dollars accounts, but if that's the way to save money and keep your household from drowning from medical expenses, I think it's a good option to at least consider. There are also some other savings options that are coming to play in options for healthcare. They call those SOS, which is kind of funny, like help, SOS, but it is a savings option, is what that stands for. So HDHP, high deductible healthcare plan with an SOS or an HSA or a health reimbursement, they sometimes call them HRAs. So back to my point, choosing a healthcare plan or the best option that's been laid out in front of you for your next year can be very complicated, and it can be, I think, kind of stressful to decide, like I said, where you go for the deductible and where you go for the cost of the insurance. I dove into this a little bit deeper, as I always do, and start to think about, okay, what happens to people when they have high medical bills? What do they do? Well, let's add to this another layer of things to consider when choosing your healthcare plan, the things that we have to do when it's placed in front of us. And another one of them is out of network. What happens if your favorite doctor, the doctor you've been going to, is suddenly out of network? Do you make the choice to continue to follow that doctor, or do you have to make decisions to change doctors? And it's not that simple just to change doctors. That requires more paperwork. It requires getting to know someone else. There are a lot of things that go with that step. And almost 18% of the claims that come through are out of network. Well, out of network usually means the deductible's different, the expense is different, et cetera, et cetera, et cetera. So that's yet another consideration and potentially another burden on the family budget. Here's the other thing that we need to look at, and why I say that outstanding medical bills become such a big burden. I've shared with you the fact that it affects your credit. It affects the ability to get car and mortgage or house loans, especially. It can play on credit card approvals, but once you start to have heavier burden of outstanding bills of any kind, slowly that credit rating drops. Slowly, if some companies get a trigger that your credit is now lower, it can raise the interest rates on some of the outstanding credit cards. It can also minimize how much credit is available. You could end up with a letter in the mail saying, hey, we cut back on how much you can have as a maximum on credit because of, essentially, they read your credit rating and said, ooh, not as stable as we thought. Let's talk about this with the statistics of the number of people that have a resounding effect of paying their, maybe that's not the word, the number of people who have extra pressure and end up having things go wrong with the medical bills that are outstanding. So the Physicians for a National Health Program, that's just the resource that I found that had these statistics, but there were several different resources, but this one was the one that was a little bit clearer. 23% of the households that have high medical bills end up in foreclosure on their home. Remember what I was saying, high medical bills, high deductibles, lack of extra funds within the household to cover that high deductible leads to more outstanding medical debt, which then starts to put pressure in other places. And in order to get out of these medical bills and maybe right the ship, the choice becomes to 23% of the households to go into foreclosure. 13% get a home equity loan. So they still have equity in the household, go ahead and decide to take a second mortgage to help relieve the pressure somewhere else. But that still does put another bill on the family budget. It's very interesting because not only 23% of foreclosures, 13% on a home equity loan, and then another percentage, another 14% say new debt. Most of these, I believe, even though only 23% are saying, hey, it was the medical bills, new debt plus a home equity loan, I believe probably could potentially lean to the impact of medical bills. It just didn't. As a person getting that equity loan, say that they were using it for medical bills. 62%, and this is according to retireguide.com, 62% of bankruptcies are related to medical bill pressures. I'm going to say this again. 62% of the households who go ahead and decide to go through a bankruptcy to get loan forgiveness is related to medical bills, outstanding medical bills. So the ability to get better loan rates or be approved for a loan for a car or a house with so much outstanding medical bills becomes difficult. Outstanding medical bills put pressure on homeowners, and at least 23% cite the medical bills as the reason for going into foreclosure. 62% of the bankruptcies are related to high medical bills and out-of-pockets. Other reasons for bankruptcies on top of the medical bills include losing the job and escalating mortgage prices. So I still say that these things are probably interwoven. If we were to go and interview some of the people, or if you are personally going through some of those situations, you can relate to the fact that a lot of the money situations become interrelated. And also, you might have seen this happen to other people that you care about. I've said this several times, and I tend to kind of weave these things and repeat, but a few more statistics before we wrap up today's episode of the podcast. The medical bills do place pressure on being able to buy or rent, even rent a home. Most of you who have gone through this process, and a lot of adults like myself who have adult children, are not familiar with this. Or people who've never rented, like my parents never really rented a place. After they got married and things, they went from one house to another house to another house. So they're not familiar with what happens to people when there's pressure of bills, including medical bills, that when a person goes to rent an apartment, to sign a lease, typically the owner of the property asks for your social security number, and they do a soft check. They have a company that will help do a look at your outstanding debt, because it rests again on the likelihood that they can collect their rent. So it all makes sense. But if you're a person who's drowning, if you have a loved one who's going through medical challenges and the expenses are rising and everything is being, a lot of pressure is being put on the budget, then it's not necessarily fair, but it happens that it becomes a rolling effect of things that don't work out. Back to 401k loans. I've talked about not a fan of 401k loans. They are not a place to get a loan because it puts more pressure on a person's paycheck, because there's a requirement to have that loan paid. It is a double dip because it's not like just paying yourself back, which is the common. And I don't mean to be sarcastic to people who believe in that, but it is a common assessment that you're borrowing from yourself and paying yourself back. You're not going somewhere else. True. But we're impacting with the amount that is out there in a loan is not earning money either. So a lot of people haven't made that jump, but outstanding medical bills are often paid with a 401k loan. At least 14% have admitted, and this again is from the Bureau of Labor Statistics, 14% have taken out 401k loans because of high medical bills. 37% have said it's just outstanding debt. 18% have said for essentials for loans. Again, I am just going to say probably medical is still in this other 55% that are saying high debt and other essential debt that needs to be covered. I'm going to go out there and say there's probably a very good chance that medical is playing a role in that picture. Maybe not a high amount, but the impact of higher deductibles and more of the pressure coming onto our household to take over the expenses of healthcare. So what do I want you to do? I always end these podcasts with hopefully rescuing you a little bit. If you're still listening to this or you catch little bits and pieces of this, I don't like being a Debbie Downer. I do feel that it's important to help people to see that it's real. It's okay to have that stress. It's expected. What I want you to do is understand that there are different directions, there are different programs, there's different opportunities, not necessarily something that can take it away, but there are things that you can be informed about by listening to this podcast. I'm hoping to help you to see that you have the opportunity to make some moves to help prevent or help to be more prepared when you have unexpected medical expenses. One of them is look to see if you can add a gap insurance, an accident gap. You might be familiar with a mortgage gap insurance, so to speak, mortgage insurance. That's when not enough money was put down to purchase the home, and as part of the lien on the home and the loan, you're buying a gap to fill in if something happens with that particular loan, that it's got that extended period is covered. I didn't explain that as best as I could probably, but I was trying to make that there's a gap in there until you get to a certain percentage where you're actually really paying for the actual mortgage and getting some equity started. Also, gap insurance is available when you buy cars. The reason why, if you buy a vehicle and you are already upside down, where you owe more, where your loan is greater than the cost and the value of the car. So you buy gap. Sometimes that's an extra $10, $20 a month or per payment. I can't quote it exactly, but most of the time, if you're buying a vehicle, if you're not being offered that, you should ask about it, because it can protect you beyond imagination. If you happen to have a wreck in the vehicle and you have to replace the vehicle and they don't give you enough to cover the whole loan, because they'll give you the full value of the car, but if you've got a bigger loan, that gap insurance can save that and keep you from having a really bad experience with replacing a vehicle. So what's amazing, and you've probably not heard about this, is gap insurance for healthcare. If you have a high deductible healthcare plan, look to see if there's gap insurance that's available, especially if you're self-insured. You probably have a better chance to find a gap insurance because there are more options. You don't have a company up above you. You're not an employee of a company that's providing health care, and they've chosen the menu. If you have an opportunity to choose your own menu, look for gap insurance. I'm going to tell you personally, and it's part of the other motivation for today, is that I personally am in a high deductible healthcare plan. I called because it's December, and I did this in November, talked to my agent for the healthcare plan that I need for next year coming around, because I have a more chronic situation with my back. And I know I'm going to need to have a good transition into next year and to minimize it. And she reminded me that she had recommended. So if you're talking to a healthcare agent, ask about accident gap, because all of my out-of-pockets can be run now through my accident gap. And it's amazing to me how much will be covered now of all of my out-of-pockets, because guess what? Fun fact, my particular injury was out of network too. So I'm at the hospital and I'm faced with, because I'm out of network, having to pay part of the bill while I'm sitting there because they're afraid I'm going to run out of town, which with a back injury, I wasn't going to run out of town. But in a real situation, when a person is in extreme pain and they have to make decisions, I'm encouraging you to put some of these things in place if possible. Gap insurance, HSA, other sources of income other than second mortgages, 401ks. And this is where my company comes in again. I hope when you watch these podcasts, or if you catch anything on Blazing Star, Facebook, Instagram, anywhere, that we're publishing some of our work and what we do. If you have moved yourself into the type of life insurance, first of all, you should have life insurance always. And I don't preach that very often. I come in kind of from the side and try to show you why rather than tell you why. But I am going to tell you, you should have life insurance, basic life insurance for sure, one with living benefits. I've had a podcast about living benefits and the value if you ever have a situation such as I've had where it's a long injury. There are times you can utilize facets or portions of life insurance to help put you in a better position. Those resources can improve the issues with medical bills or lost income from not being able to work because of a medical injury. I want you to very strongly look at cash value life insurance that you're paying your premiums into that grows cash value. Because if you're ever in a position and your life insurance policy has had a little time to mature, then accessing a portion of the cash value would not trigger any kind of taxable event. It doesn't trigger interest rates really, maybe small depending on how you do it. But these sources can be a source instead of a second mortgage, instead of going into bankruptcy, instead of a 401k loan. So what I want you to do is please start to understand that the things that our parents did and the financial situations of our parents and what we've learned is good, but the world has changed. Like I've said, we're now funding a larger percentage of our own retirement. We are now funding a larger percentage of our own health care. To take full ownership of our money and how our dollars are spent requires having an open mind to other avenues of how you can structure your household finances, how you can start to structure your retirement, your future, how you can structure it to have a more enjoyable future, how you can structure it. And I talked to a gentleman earlier this week to enjoy your retirement, but also have a legacy for your family. And that requires being a little bit more open-minded. Reach out to people who really understand that these options are valid, that there are opportunities and solutions. And yes, they're not necessarily as straightforward as what we were used to, but they are at least as valuable or more. If you like what I have to say, or if you don't like it, if you like it, I want you to keep watching. I'd love to have you know what to do if you like something. We've all been in social media. There are certain things that you do to at least find or listen or whatever. If you don't like what I have to say and you want to put a debate out there, I'll take it. Or if you'd like me to dive into something a little bit more. But know that My team will assist you, will help answer even small questions. And we would love to at least help you to enjoy your money a little bit more while you're on this earth. Even though I talk about life insurance, we're talking about taking stress out of the picture, adding more money that you can enjoy. And we hope to hear from you soon so that we can help you find that path and hopefully help you to have less stress. Thank you to Caleb from Sal Media, who does all the edits and puts these podcasts together, and my team that has been very supportive. Continue to please check out Go Blazing Star for workshops and other ways that we do some potential outreach. But also that's a good way to be able to contact us as well as a message on this platform. Thank you. If you're still watching this, I want you to know that these things that I share with you do have statistical support, at least in the research that I do, but I'm not an expert. What I am is someone who's very passionate about helping people and helping you to see that there are other ways. But what I want you to do is do your own independent research, reach out to others. Sometimes you might need to reach out to your financial advisor or to an attorney, depending on what you're looking for information. But tune in for my opinion and how I share real life situations and how they fit with your emotions and your finances to help you with a better journey.